This chart tells you basically everything what is happening at the German DAX. At the bottom you see the smart money flow, which started its buying activities at the end of November right here, and it kept buying the index from all-time high to new all-time highs. Even the entire last week was bought by the big institutions. We were selling our second last call position into that strength because the air gets thinner up there. While checking on the volume ratio, we notice the upward pressure is losing its strength and the downward volume is picking up. I explain you what's happening. Let's hop into it. Okay, we're going to start off with my subcycle chart. It's a 4-hour time frame based on the Xetra indication, which is the cash. Here you see Monday, the large gap down, almost 200 points to the downside, which we bought, by the way, because there was lots of order flow and volume at these levels. You don't see that at the cash, you see that at the futures only. DAX left that gap here open at 21,042. It turned around, and I have to say my initial plan was a bounce only. I wanted to get rid of the calls right here, and I was going for a second leg, but then we realized that subcycle shifted. And whenever a subcycle starts, we can expect at least a 200 to 300 points rally. That happened. We were holding on to our intermediate calls until Friday. We were selling into that strength. I'm still holding one of them, by the way. And I know most retailers are short. I hope while you're watching that video, you're not short yet, because I assume we haven't seen the final top yet. There's a subcycle low due by Monday afternoon. So that Friday selling pressure we saw yesterday in the late session of the US market, we might close that gap, or you might even retest that all-time high from the 24th of January. But there are still open targets. One of them is 21,823, got missed out by 23 points because the all-time high stopped at 21,800. So I assume that selling pressure we most likely see on Monday is being bought once again. Okay, let's talk about volatility. At the top here you see DAX on the daily chart. Down here you see the VDAX. And the main difference between these two is that they are diverging by a lot. First, we had a positive divergence here, while DAX made temporary lows on the 13th of January. The VDAX kept making lower highs, and it's not really moving anywhere since Christmas, while DAX just kept making one all-time high after another. While looking closer to the volatility is actually contracting in a triangle, and that means usually that there's something odd under the surface. In other words, there's something going to happen, and most of the time these triangles, especially at volatility, they pop to the upside. The question is when there's also a cycle chart for the VDAX. Members know about that. If you want to know more, you can sign up at jcs-charting.com. You get plenty of updates, several indicator updates about smart money, advanced decline, sell signals, and so on. By the way, here's also a 9 count, which finished not that nicely with that low on Monday, and DAX started a new 9 count. It is possible that we get a complete new 9 count, which means another 5 days are missing. So we actually compare the current candle close to the candle close 4 days ago. That means on Monday we need to close above 21,430 for the 5th candle. It doesn't have to be completed, but just in case it does, that would mean next Friday with another high. that would be actually a very strong selling signal, just to keep that in mind. I continue with the Dow Jones. It's a daily chart, cash indication. We witnessed an almost perfect all-time high double top at 45,054, which was the high on Friday, before we started that selling pressure, which ended up in a bearish engulfing candle. Yes, there were news released in the afternoon which caused apparently that selling. I don't consider any news in my analysis because, and if you ask me, these tariff news, they were well known from particular addresses before even that happened. So let's talk about the technicals. There's a pop gun, a new one, which got built on Monday, and it couldn't really break to the upside here. It got like 4 attempts, it failed. We most likely see a lower low on Monday, because usually when you see a bearish engulfing candle like that, there's a second one. I don't assume that much selling pressure at the beginning of next week. I assume, as what I said in DAX, I assume actually buying pressure. Also at the Dow Jones coming in probably after seeing new lows on Monday. The S&P 500, 4-hour time frame, also a cash chart. Here you see that large gap we saw on Monday, which got bought even before the cash opened. The futures actually went much more further down. Just after the cash opened, I gave my members that circle here, which is also a subcycle low, and it was a perfect retest of that trend line here, which is the upper trend line of a bullish Wilber wave, a wedge, by the way. We left a large gap open. I kept mentioning the whole week that gap zone is going to be closed first before we see any more selling. And that actually happened. I kept on saying that, keep buying these dips. We did so. We actually bought these pre-market lows as well. And now there are two options for me. Either we run into a slightly lower low on Monday, which is being bought again, or we actually running into the next cycle low into the middle of the week to retest that trend line once again. That would mean we see a clean A, B, C structure. It would close this gap here as well. We closed actually that gap in the futures, but we didn't saw these price indications during the cash. That would mean we see a 50% or 61.8 retracement of that rally we started at the middle of January. Yeah, one more important thing to mention is 6081. That is the trigger level of our green sequence. That green sequence triggered 6165 to 6199 as a minimum target zone. So it doesn't really matter if we just dip here a little deeper to build a triangle or a bit larger for a leg C. I assume these levels to be hit very soon in February, or even higher, before we see a larger correction to break these mid-January lows. A quick look at the VIX daily chart here. A cycle low is due by the end of next week or the beginning of the week after. Keep that in mind. That could cause a last rip at the index while diverging onto that trend line here. We keep watching for several weeks. I was showing that chart here in my latest update. It's a JFD indication of the Nasdaq. The price indication is a little off to the cash. What was interesting here was that pop gun we had at the top. Obviously it popped with that futures gap to the downside. It made 1, 2, 3, 4 duplications, 4.5 duplications to the upside, and we bought at 2700. 100 points above the low, and I kept telling my members we're going to see the trigger level of that pop gun very soon. We did so on Friday, so we also closed that futures gap here at 21,730 before we started that selling. And also that candle, I mean the cash candle, looks quite the same. It's a shooting star, which is not really a bullish sign. We might see another dipper here, but keep in mind that zone here around the July all-time highs has been very strong support since Christmas. So this is actually the bulls defense zone once we get there again. A quick look at the 4-hour time frame of the Nasdaq cash indication. 21,820 the level here to mention, which failed on Friday, but it got triggered here over 2 days for minimum targets of 22,169 to 22,310. These targets remain valid as long as these lows out of mid-January hold. Also nice to see here is that gap. We jumped over that gap here, that up gap, twice. That was also like a buying indication whenever that happens. So we were open from that gap from above and from below. We closed it then from the wrong side, which tells us the upper gap has to be closed as well. And that happened on Friday. I kept telling that to my members. By the way, there's a subcycle low due by Thursday, if this chart here is correct. We haven't put that much data into it yet. So I assume also here a lower low on Monday before more buying activities actually start. Whatever it will be, we might end up here in a contracting price as well. There's a valid Wilbur wave wedge here still with a very steep target line. But you know, at Nasdaq, everything is possible. A quick look at silver. We have that bullish Wilbur wave wedge here in blue for quite a while. We were buying somewhere around just below the 30 price level at 29.59, I believe it was. We triggered here that green sequence. We finished that last week, so we can actually delete that. And the next trigger is actually at 31.80 for that blue sequence, which could lead into that target line. But I assume it will take a while. Silver was diverging to gold for quite a while, but we're going to have a look at gold now. Yeah, gold here on the 4-hour time frame, as you see here, it's a very clean pattern. Sometimes it's a bit shorter, sometimes it's a bit longer. We had a tricky situation here on Friday, or it was actually the day before Thursday, while we were actually breaking that cycle low here. However, I kept telling my members that might be still a good buying opportunity because we were at 138% of a red sequence, which likes to be a turning point. And then we went higher. We actually were ripping to new all-time highs. We triggered that sequence at 2788, and we had already triggered that sequence at 2766, and we were hitting both min targets, the 138s of both sequences. There's a subcycle low due by Tuesday afternoon. So this is just here not a price indication, but a timing indication that a low is due, which could be bought again on Tuesday if we make it by Tuesday into a new low at gold. Yeah, this was my weekend update once again. I hope you liked it. Leave me a nice comment, and I see my members on Monday morning. Take care and bye-bye.